wild volatility in the market, as if we don't have enough problems doing our Christmas shopping. Anywhere you look, stock market, commodities, we're gonna focus on uranium today. Big signals in the uranium market that you need to know. We're also gonna look at Oklo. We're gonna look at energy fuels. And super important, we're gonna look at the chart of Cameco, because that will determine where the uranium stock's gonna go in the next weeks. Let's get into it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month.
Well, didn't we all think we would have a nicer Christmas time than this, what's happening right now? Let's get right into it. Look, the stock market, you can get this information anywhere. You know, here at Hot Trades of the Day, we like to focus on the sectors that not everybody talks about all the time, where we can get an edge. In the positive way, in the negative way. In the positive way, we take a look at platinum real quick. Thank you, yes, that's a party. I've been telling you this for weeks. Get long platinum, that is paying out big time. That is the positive. Now, onto the negative, wide variety, we're gonna focus on uranium. Because there's real, panic is too strong a word, but people are worried. And they should be. Now, if you've watched my video, my last uranium video from, I think it was last week, you know what happened. You know you were not surprised. This was the higher probability. And with this, I mean the breakdown we have seen in the past trading days. This is the URA, the ETF for the uranium miners. And as you can see, we've been breaking down. I warned you to be very cautious once we broke that short-term uptrend from November, December, and we hit the upper end of the downtrend channel, clearly a downtrend channel. You can see it here, got confirmed. We figured that one out really nicely. And if you didn't see this video, hit the subscribe button so you don't miss these type of videos. That would have saved you quite some losses if you knew what was going on. I told you then the line of demarcation is the small blue support zone that needs to hold. If we don't hold this, we're gonna sell off hard in uranium. Well, guess what? It didn't hold. We broke below it. We closed below it yesterday. As you can see here in the daily, the question is now, do we confirm it? If we confirm it, it's light out. When I'm talking lights out, I don't mean we're gonna go to zero, but we're gonna go down. Now, what's the reason specifically why the uranium stocks are going down? I've also told you that. The reason is that uranium stocks, along with the junior explorers, are the most risky stocks in the commodity market. They're the furthest out on the risk curve. Now, that's great when momentum is positive, then these stocks really move and go to the moon. But now you see the reverse. When things go bad, they go really bad. And that's what's happening. So we are talking about uranium stocks. So stocks, they can only decouple themselves from the overall equity market if the commodity, if the underlying commodity is not moving up, which it is not. We're going to look at this in a second. For so long, otherwise they're going to get dragged down with the overall stock market. And then if it is the ultra speculative sector, which is also predominantly retail investor driven, which means these investors always going to act emotional, most of the time act completely wrong, and they will sell in panic when things are getting low and bad. And that's why I think we only will see the sell-off accelerate the worse it gets, right? The same way we see the buying accelerate when things get too good. So that is the reason. There's no fundamental reason in uranium, because on Wall Street, people are starting to realize that the AI data center trade on uranium is the right trade, but we're way too early for that. Okay? This is 5 years, 8 years out. And that's starting to get a hold on Wall Street. They're selling, and then obviously retail, unfortunately, will be last, unless you're here at Hot Trades of the Day. We've been on this for quite a while already. I've told you this before. This same scenario. Again, subscribe button. Also, if you think, hey, just give this host who works, for free every day to give me some information that's valuable, a small Christmas present. Subscribe button. That's all I'm asking for. So where are we going from here? Well, we're just looking at the charts. I'm not, you know this if you watch this channel, I'm not one of those, we're going to the moon all the time, everything is 1,000%, it's a 10-bagger. I'm telling you how it is, and what we see in the chart, and what we see in the sentiment, and what we see on Wall Street, or at least what I hear on Wall Street. I'm not going to say I know everything on Wall Street. So the next zone for us to look at is this double support zone of the mid level of the downtrend channel, which was clearly confirmed here, and the upper end of the support zone. But really, if we get a more extended correction, the target zone has to be down here, the lower end of the downtrend channel, the gap fill right here, purple line, and the lower end of the support zone. This is where I would really start to get interesting, or interested in uranium again. Because, once again, the overall story for uranium, it's intact. And it's going to work out. The question is only at what prices you're going to buy it and what's your time horizon. The story right now in uranium that's valid is that every country, except the tree-hugging Germans who live in their own little schnitzel bubble, are building nuclear reactors like crazy. Russian uranium and Russian adjacent uranium, meaning Kazakhstan, Uzbekistan, is off the market. So again, made in America uranium, that is the trade that will work out, but that doesn't mean that we need to buy at every price point. The data center story, that'll come on top later. Okay? So that's why we can sit back and wait to get our entry prices in uranium, and we don't need to rush to buy now. Because the number one story that drove uranium, the price of uranium stocks up in 2025, the AI data center boom, that is cooling off now. Now let's take a look at uranium price, and we're going to go Sprott Physical Uranium Trust. As you know, I like this a lot. Why? It's the uranium price plus sentiment. It's not only the uranium price, it's uranium price plus sentiment. And you can see we are leaning towards weakness. We are below the uptrend from April. Now we haven't broken down, but again, as I told you, we don't need to break down. We just need weakness, and then weakness in the stock market, and that'll continue the sell-off by leading the retail investors into panicky behavior. Okay, so let's look at the stocks as I promised you, and we're going to start with energy fuels. I pointed out energy fuels in the last uranium video, and I told you this blue support zone, that is the line of demarcation, that's the line of truth. And as you can see, boy, we are holding on by our nails to the lower end of the support zone. We fall below it. The target zone is that orange circle, the uptrend channel. That is the first area from April where I would even get interested in looking at energy fuels. Before that, I'm not. I've pointed out to you that this rather looks like a bear flag and that we need to watch out, that we're probably gonna break lower. And that's exactly what it looks like if we confirm today the breakdown below the blue support zone. That leads us to the real problem, and that is Oklo. You're familiar with the ABC arrows, aren't you? Because I pointed those out in the last video and told you, hey, this looks like a bear flag. This looks like a B wave and an ABC correction, same thing. Which means we have an A, a down leg, we have B, a counter rally, which then leads to a C, the second leg down. And then we reassess. I told you, boy, we break the uptrend and we break that purple horizontal line, we're in deep trouble. Exactly that happened. So we have a completed bear flag. In Oklo, we already have a confirmed breakdown. Remember, at energy fuels, we're just about to break down. So energy fuels looks like a tiny bit better, but, well, better. Less terrible. In Oklo, we're already there. So, what was my price target? I told you my price target, first one would be this area right here. And as you can see, where I put the orange circle, I didn't even expect we would break down this fast. We might reach this in a few days if the sell-off continues. It doesn't really matter. What matters is the following. Oklo, together with Cameco, is the big heavyweight in the URA and in all the uranium miners ETFs. So let me show you this right here. These are the top holdings today in the URA ETF. And as you can see, Cameco 23%, Oklo about 11%. So 2/3 of the whole ETF is made up out of two stocks. So if Oklo breaks down and Cameco goes down, the ETF is going to take a big hit. That then will lead the retail, which is always badly informed, to freak out and start selling. That's what's going to happen. So that's why we need to look now at the chart of Cameco to figure out, hey, what is the situation here? So let's look at the Cameco chart. Yeah, that doesn't look great. So what are we seeing here? Uptrend from April, broken. Okay, we have seen this in almost all uranium stocks by now. We have a yellow resistance zone. I'm going to zoom in on this. That turned basically into the double resistance zone. You see it right here, right? And Cameco was not able to break that zone. It hit it, it got rejected, it turned down, and now yesterday we broke the November-December rally uptrend on the close. So the confirmation is not there yet, but the probabilities, and that's what we're talking about with technical analysis, always probabilities, suggest we're putting in a lower high here, right? All-time high, lower high. Now we already put in two lower lows, low, lower, low. So that suggests that Cameco is going to go down. Cameco is a big stock. It's not going to break down. This is an excellent company. The only problem with Cameco at any time has always been valuation, never fundamentals with the company. But if this goes down, this is where institutions are invested. They will sell, and they'll sell hard. And if Cameco goes down, we know this now, and Oklo goes down, the URA is going down. So, if the URA goes down, the retail is going to panic, and then the smaller stocks, who not even that, they're not even maybe, a lot of them are not even included in the URA, or the weight in the URA is not even that high. Doesn't matter though, they'll sell off. Now, what does this mean? This means if you haven't taken profit, you might want to think about taking profit in some of the stocks. Cameco is one of them that really still makes sense. As you can see, we're still pretty close. We're holding up quite well here at the moment. Second thing, don't rush to buy right now. There's no need to. There's another story with AI data centers that's developing that the market hasn't caught on yet at all, and I think it will in 2026. That is way hotter because it's more current than the uranium trade as far as AI data centers are concerned. The more the AI data center trend cools up for uranium, the more the momentum will fade. You know, I've told you this here at Hot Trades of the Day all the time. If you haven't subscribed yet, hit the subscribe button so you don't miss information like this. Uranium stocks are the ultimate momentum stocks in the commodity market. So if momentum cools, uranium stocks will cool. The money is going to go somewhere else. I have an idea where it's going to go. We're going to talk about that in an upcoming video. It's not confirmed yet. But the same way I've been warning you early about uranium, I also want to put out a positive warning on this sector coming up. So be careful. There's no need to rush into buying new uranium positions right now. The charts clearly signal us we're going down. We're going down further. And when uranium stocks go up, they go up higher than people think. When they go down further than people think. At the end, that'll give us a really good buying opportunity, but I don't think that opportunity is here yet. That's it for today. Have a great day. Talk to you later. Bye-bye.